Good morning, ladies and gentlemen. This is Butch Shorak. It's Market Recap for Options University, Friday, August 16th, 2012. Access to this webinar is for educational, informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we are not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And with that, let's take a look at the SPX as we can say only one word, and that is a breakout. The uptrend continues. As we see, we're getting higher highs, higher lows, breaking above that 6-day rubber dam that was sitting there at 1416, 1406. All right. You see that we popped right up to that next level of resistance at 1417. And we see that at 1417, our next stop is up there at 1431. Will we end up there or not, or is this going to be far enough, as the air is certainly getting a little bit thin up there? As we see, we're at 1451 for the close today, up 0.7% in the SPX, continuing in our uptrend and certainly showing us that upcycle that's been there for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days as we come into options expiration. Taking a closer look and a little magnified view of this, we see that we had a huge day today as the market popped up and finally broke through that area of resistance that was sitting right there. Is the air getting a little thin up there? You bet it is. Is it going to get thinner? We'll see if we head up to that next level of 1431, which is our next level of resistance. We also have somewhat of a diagonal resistance up there at the midpoint of around 1425. Time to roll over? One would think so, as we've seen that we are a bit overbought in the market, but it may not be tomorrow as we go into options expiration. SPX options close as of Thursday night, and they will settle as of Friday morning on this week of monthly expirations. As we look at the Dow, we see that the Dow, with certainly larger volume than we've been getting, burst up and went through that bit of resistance there, headed for that level above, which is at 13,300. Another 50 points on the Dow certainly is capable of producing that as we move forward on this Friday of expiration week. Looking at the NASDAQ, up 1% for the day, and a healthy breakout from that area of resistance that we had sitting there slightly above 3,000 as we went to 3,062 heading into that Friday. Looking at the Russell 2000 again, breaking out of that area of resistance, heading up, continuing in that upswing as we see the market showing what one might consider a little irrational exuberance. As the air gets thinner and thinner on low volume, we move forward as the bulls seem to be in control of the market without much fear in the market, as we see that the VIX closed at 1429, which is that area below 15. Are we overbought in the market? You bet we are. Is there much fear in the market? Not at this point. We'll see if we move on to that level of fear, if the market will pull back. What does the bonds market do as the stock market goes up? It pulls back, pulling back to that 200-day moving average. We're sitting there right around 119. So a couple more points that in this downtrend the bonds can show us as we're having this big pullback in bonds as the market shows much strength. Looking at the financials, we would expect that they would follow the overall market. And we see, oh yes, another breakout above that high. Hit that resistance area, which is sitting right above us with the financials, the XLF, which is the ETF that talks to us about what the overall financial market is doing. Next, let's take a look at oil. As we look at oil, what did oil do on this day as the market goes up? Yes, it too broke out of resistance. Can we see breakout with what kind of volume? Kind of a normal volume after 4 days of extremely low volume. So we see that we're kind of at normal volume on that breakout. breakout. Certainly no big volume surge as we broke out. What does gold do during this kind of a breakout? Well, we see that gold will follow the overall market. Again, trading within its trading range with certainly a good deal of resistance up there at about 158. We'll see what gold does looking at GLD, which is, again, another ETF telling us about the overall sector. What kind of volume did we have at this breakout today? Well, let's take a look at the spider to give us an indication of that. And we see rather pathetic volume on the breakout, rather pathetic volume in the overall market. The high frequency trading seems to be pulling us up. We'll see how far they go. Looking at the SPX, we know that next level is up there right around 1431, 1437, which is previous highs for the last few years. And we'll see if we head up to that as we are having that summer rally in August, which is indicative and can happen during election years because usually August is a pathetic month for the bulls in the market. And we're seeing very much the exception of that this year in an election year, which certainly can happen during these election years as we talked about at the beginning of the month. Expecting rather pathetic move in the market, we got a nice strong upward trend in the market going on in an upward cycle with a bit of a low volume in the last basically about 12 days. So with that, this is Butch Sharp with Options University. For those of you that are gold members, stick around. We'll take and see how our stocks did during this August rally. As we see today, we got a breakout. Which of our stocks is breaking out? Which is not? Looking for bullish trades as we move forward as the market continues, and looking for bearish trades for those stocks that do not continue. Looking for those to drop down even further when the market finally does roll over. So with that thought, this is Butch Sharp. Thanks for being here. It's Friday, August 17th, 2012. Options University is your place to look for the market recap for the week. And we will see you Monday morning with more market forecast. In the meantime, if you're interested in more free videos from Options University, you can watch the little video that takes place at the end, giving you a website where you can contact and look for more free videos from Options University. Ladies and gentlemen, thanks for being here. This is Butch Sharp, and we will see you Monday morning. Welcome back to our gold members. It's August 17th, 2012. And can we say the word breakout as we see that the market has finally broken out of that 1406 level after spending more than a week there trying to burst through that level, many times doing it intraday, but certainly closing below that level every day until today with a rather lethargic start in the market on this Thursday morning. We see that finally it broke out, and when it did, it broke out with gusto, breaking through our 1406 level right up to that 1415 to 1417 level and stopped there for the day. Where are we headed next? 1431. Is it going to be this week? That remains to be seen. We could have a little digestion of this level, spend some time closing below that 1417 as we go into the next week. This is options expiration day, and you really never know what's going to happen on options expiration as we see the market makers steady their positions and take advantage of the market in order to solidify those month-end positions. With that, let's take a look at some of the stocks that we're watching. Looking at Amazon, we see that it too broke above its previous resistance and headed up into blue sky as it closed above that previous high back in the end of August. So trading above its trading range and showing good strength. Amazon breaks out, as does Apple. As we see, it does exactly the same thing. Been heading straight up ever since earnings, going into that 636 level. No longer playing around in that summer range that we saw out of Apple. If we have a pullback, look at Apple for more moves to the upside. So buy on pullbacks might be a suggestion one might consider for the mighty Apple. Looking at AutoZone, we see no participation, barely getting up to that 200-day moving average. If the market pulls back, look at this for some bearish money in the market, as AutoZone is non-contributor to this bullish move in the market. Looking at CMG, we see much the same thing, as we see very little movement taking place with CMG, as it's headed up for that diagonal line that we have, not even approaching some of these other levels that we've talked about, as CMG completely changed its position with volume as it went through earnings this last time around. CMG, not the stock that it once was, looked to the downside with a market pullback. Google loved, headed up, continued right on up through earnings and continuing up into that blue sky. The trend is up. On pullbacks, look for Google for money for the bulls as it continues to keep heading in that upward direction. GMCR trading in a new trading range, but not showing any great gusto, as we see it currently at 24.87. Might look at this for potential iron condor, trading above and below current price, sucking money out of the bottom side and out of the bullish side. And remember, with the right broker, one of these trades is a free trade with no margin requirement for it whatsoever. ISRG breaking through that previous high. Next stop, closing the gap up there at about 545. If the market continues, we can see ISRG help lead the market up, as it's certainly shown some bullish moves out of ISRG. MasterCard not showing as much of anything. Look for that iron condor for a stock that's relatively stable, not moving outside of its really trading range, not showing as much after earnings. Did have a bit of a sell-off, not showing any great weaknesses. The market goes up, though, not seeing any great strength. Next, let's take a look at McDonald's, and we see another company. Earnings definitely nailed it this time around in the summer quarter, and we see that it is going nowhere. Up day in the market today, where's McDonald's going? Down, a downward trending stock in a down cycle. You should know how to trade that with your different strategies that are capable. Looking at Nike, see we're trading sideways within a certain trading range. Again, that kind of stock that provides for us this opportunity for the iron condor, where we sell an option and we buy an option in a particular order, so that we contain our risk, know what our risk is going into the trade, and have a good idea of what our probability is in that trade. Nike, absolutely potential for one of our condor moves. Next, let's take a look at Priceline. See that we had a nice breakout today, breaking above that previous high. Next stop up there, closing that gap up to 680. It's 100 points up there. Can this stock move 100 points? First resistance right there at the 200-day moving average at around 605. So take advantage of Priceline. If the market continues up, very likely Priceline may go right with it. Looking at WW Granger, we see that we had a nice little breakout today, trading above the 200-day moving average, trading above the 30-day moving average. All we need is this 50 to move up so that it can show us that it belongs in that category of an uptrending stock. WW Granger trading within this range. We'll look for a potential of around 210. And notice the bottom of that trading range is right there at about a moving average of 195 on the 200-day moving average, which should act as support. With that thought, this is Friday. It is options expiration week. A difficult day-to-day trade, to say the very least, as it's difficult to tell what the market's doing. SPX options closed on Thursday night, settlement on Friday morning. The rest of the market is closing their options for the month on Friday, August 17th, 2012. Trade what you see, not what you think. Thank you, ladies and gentlemen, for being here. Rich Sharma, Options University.